don't just lump everything together. Whether you have a rent, if there's a rent in the contract, raise invoice for rent separately. Where there's a maintenance and you have provided service, which is a contract of service, maybe you have equipment, you have given your equipment out to somebody, you also provide driver or operator, let me use the word operator, not driver this time around, operator to operate the equipment. So in that case, please always separate your invoice. It can be part of the agreement that I will raise invoice separately for different services. Imagine you have raised this invoice together. The Nigerian customer that want to be compliant will simply reduce charge withholding tax on 10%. You just take it as lease. However, under that you have a maintenance arrangement with the company. So that is the number two planning around withholding tax. So Mr. Obida, let's go to the third one. So invoicing. Now, invoicing is another key element of withholding tax planning. How do you raise your invoice? You can raise your invoice to have a higher withholding tax exposure. You can also raise your invoice in a way that will ensure that you are exposed to a little or fewer or little minimum withholding tax available. Now, if a two companies, for example, have done the same job, if the other one that's not keen, is not deliberate about how you structure your invoice, just raise invoice anyhow, I tell you, it will be exposed to higher withholding tax rate than a deliberate company that knows what is doing. Maybe, for example, in the detail provided on invoice may impart, rather, the detail provided on invoice may impart the withholding tax deductibility of transactions. Thus, an invoice should be structured to clearly state the income accrued to the recipient separately from all other costs charged. For example, you are a contractor, you have subcontractors, you have subcontractor A, subcontractor B, subcontractor C, and all this, you are the one, maybe you are the leading contractor, and you believe, oh, it doesn't matter, let the money get to me, I will split the money to other people. No. Inside the contract, you have what is called reimbursement. Let me give an instance. For example, a painter has a contract to paint a building for 10 million naira. And in raising his invoice, he just sent a 10 million naira to the Nigerian customer, client. The gentleman will just apply with 35%. That is a contract, right? But however, if this painter has structured his invoice in a way that it shows the reimbursement element, this young man is going to buy paint, this young man is going to buy putty, what they used to putty to fill the wall. This young man is going to buy maybe some other cost in the course of the job. Why not structure your invoice in a way that every of your reimbursement or costs that form part of your contract are indicated on your invoice? However, because of Nigerians supply of service, they are always smart. They don't want to show the young man or the customer how much income has accrued to them. And again, in taxation, you cannot eat your cake and still have it. Very simple. If you have decided to just lump up your cost in a bit not to let your customer know what portion of your contract is your income or your profit, you will be subjected to higher withholding tax rate. So, but if you are very deliberate, you are conscious, and you want your withholding tax exposure to be reduced, kindly structure your invoice in a way that, number one, when you are having your invoice will be showing how much of the amount of that contract you are going to use for painting, how much of the contract you want to buy for cement, how much of the contract you want to buy for sand, how much of the contract you want to use for buying what other thing maybe plumbing work and all the plumbing materials. So in the invoice, you now show your profit, which is part of your contract amount. Obviously, withholding tax will only be subjected, your only profit will be subjected to withholding tax, not on the contract sum. But in the case where you fail to structure your invoice properly, withholding tax will simply be applied on the contract amount. For instance, A bill from a service provider may include both the cost of material used for the project and its labor. Ideally, withholding tax deduction should only apply to the portion of the invoice amount that relate to the labor charge, that is his own income now, which is his own, let's say, professional charges, to the extent that the service contract allow for the reimbursement of third-party costs and the invoice distinguishes the labor charges from the reimbursable costs. In this case, you have shown all in your invoice how much amount relate to your reimbursement in terms of what you are going to use for painting, what you are going to use for cement, what you are going to use for sand, and your invoice is actually showing what is your labor charge, meaning your professional charge or service charge, whatever be on the contract. So in this case, you will be exposed to reduce withholding tax rate. I believe in this portion, in this segment, these are the only available tax planning around withholding tax will be letting you know. And I still want to encourage you to come around for the module 2. We will be talking about a lot of, like I said earlier, a lot of tax planning around taxes. What is important is we need to look inward, we need to be creative, we need to know we have to be conversant with the tax law. By the time we know tax law, we cannot, this is not even tax avoidance now, because you have to take a loophole. But this is just arranging your business in a way that now the law is very clear on what should be, what income on which withholding tax should apply. Now, we have not done anything to show that or to indicate that withholding tax should not be applied on the income. No, we are still saying it should be in charge of my income rather than my reimbursement or reimbursable cost of my contract. So it's now important for me to structure my arrangement, structure my contract, structure my invoice in a way that I will be exposed to minimum tax. And that I've come to the end of my presentation. I look forward to having you around in the second module, and I'll be waiting to stand by for question and answer. Thank you so much for your time.
Yeah, thank you so much for a wonderful presentation, Mr. Kenny. As usual, I'm sure you're always adding value to, your session. So we want to thank you for finding out time to be on board. So it's now question and answer time. And again, as I said, this is our last module for our last training for module 1. And I'm sure most of you have gotten your manual, although a few might not have gotten their manual, you will get it. So, but in terms of the videos, we'll upload the video on the site, and you have from January, to the end of March to watch the video, because this session is from January to March. And we encourage you to also enroll for module 2 and for module 3, so that if you want to now go a bit deeper, looking at decided cases in taxation, sometimes I'm looking at more into tax planning, capital gains tax, petroleum profit tax, and all other aspects of tax will be looked into. Okay, and I want to thank you. A good number of you have been very, very, very consistent from the one, and I encourage you to go through the assignments that you've been given, do the assignment, the activity, and send to us. As soon as you've gone through the assignments, those activity, then you have your certificates to be issued to you as well. So it's time for question and answer now. Please, your question. Okay, your question. Okay, in slide 12, someone is asking question on regards slide 12. So I'm sure you've gone through okay, minimum tax reduced to 0.25% for 0.25% for 2021 year of assessment. That's minimum tax is applied on turnover. That's gross turnover. Okay, so that's 0.25% of gross turnover. Okay, so I think that is where you are having it. So usually 0.25% of gross turnover, and the turnover is after you reduce franc investment income. Okay, so income that you've already deducted tax from. So minimum tax is 0.25 of gross turnover. The standard minimum tax is 0.5% of